I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Great to be back on again, Jim.
Lobo, there's some interesting stuff that's happening in the uranium space. What is it?
Yeah, the other yellow metal is not shiny, but it sure is putting the shine on a lot of investors' eyes these days. And the big news that's making headlines, or making conversation at least, is the so-called Section 232 decision that might be coming up, where the U.S. Department of Commerce has been petitioned to look at the U.S. dependency on foreign uranium. And 20% of the U.S.'s power comes from nuclear power, so, this is important, this foreign dependency. Of course, you and I know that a lot of this foreign uranium is Canadian, so it's not a terribly scary source. But, it's a reasonable question to ask, is something so vital as a large chunk of the U.S.'s electrical supply, overly dependent on external sources? So if the U.S. were to do something, like there was a petition, and one proposed remedy was to require U.S. utilities to source 25% of their uranium in the country. If they did that, now at a time where there's basically no uranium production, even the lowest cost uranium producers that are still even trying, they'd rather buy the uranium on the market and sell it into their long-term contract at higher prices than mine it, because you can't do it at a profit at today's prices. So obviously this would be a major, major boost to U.S. producers if some big decision were to happen. And so what's really got people all excited now is that the Department of Commerce's report is due on the president's desk April 14. That doesn't mean that uranium prices will go through the roof the next day. But it does mean that the clock is ticking on whatever might happen if the report is made public at the same time, or whatever time it gets made public. Depending on what's in there, it could really light a fire under the prices of U.S. uranium plays. And I would say to our Canadian listeners out there that I don't think it matters who owns the uranium asset. If it's a Canadian company that has a U.S. uranium mine, well, the uranium is still produced in the U.S. and the jobs, and I think, that matters to this administration, are still in the U.S. So the fact that the profits might be shipped off, that doesn't matter so much. You're still securing your domestic supply. So, you remember back in the day when this big Bitcoin fork was coming and people were talking about, which one was going to be better, Bitcoin Cash or Bitcoin Classic, kind of like Diet Coke and Coke Zero. There's this big debate. And they both kind of paralleled each other, but there was a difference in the end, and getting the right one did make a difference. So, the long story short here is nobody knows what's going to be in that report. They could report nothing, or they could say, we're not worried about Canadian uranium. We don't need any changes in policy right now. Or they could say, this is a serious concern. We really recommend that the U.S. utilities be required to buy uranium produced in the U.S. And then it would take some time for the government to actually do something, and then it would take some time for the new contracts to fall out of that. But the reality is that, the moment a decision comes down and is made public, if it's pro-U.S. uranium, a lot of investors are going to pile in. And I can tell you, when I write about this subject, or I write about uranium at all, it gets more response than anything else I do. Maybe everything else I do combined. You talk about gold bug, silver bug, uranium bugs seem to be the most avid of them all. So I see this as a really interesting short-term trade as well as a long-term potential. If, you're bullish in uranium, great. This can be sauce for the goose. If you're not bullish on uranium, this is still a tradable event where if the Department of Commerce lights a fire here, everything pops. You can take your profits, walk along. And if nothing happens, you unwind the trade, you get out. It's not like a lack of this boost is going to somehow cause uranium to tank. So there's an asymmetrical risk in this speculation in the near term.
Well, when it comes to security of supply, don't forget the U.S. ruled that Canada was an unsecure supply of steel and aluminum and slapped major tariffs on it. So Canada doesn't take any of this talk lightly. We're considered now an unsecure partner and something that we've never been.
Yes, I understand. And so, and there's also the free marketeer in me wants to say the government really shouldn't get involved. The uranium market should not be regulated in that way, and the utilities should not be forced to buy supply from anywhere other than wherever they find it cheapest. The market should determine what happens here. And, as a Canadianophile or whatever the word there is, I like Canadians. I'm not suspicious of Canadians because they eat round bacon. That's okay with me. It doesn't matter what I want though or what I think. What matters is if the United States government does this, it's going to create higher prices for uranium sourced in the United States because none of the mines can make it or produce it at current prices. So even if the prices go down and Kazakhstan turns the spigots back on, right, and prices go down in the world, this could still cause this fork to occur. This is good. I'm not promising it will happen. I'm just saying it's a tradable event because there's very little risk of anything really bad happening if it doesn't happen. And if it does, there's a certain set of stocks, which of course people can find out what my picks are at independentspeculator.com, sign up for the newsletter. But anybody could see this coming and potentially benefit from some fairly obvious candidates that stand in line to benefit.
Plus, Japan, China, India, don't they plan to put a lot more atomic power to work?
Well, with Japan, it's a restart, right? And there's some question as how much would be restarted, and it's pretty clear that the Japanese obviously are very, very sensitive after Fukushima. They would like to rely on nuclear as little as possible. But the reality is that they need the lights to come on, and it takes time to switch to anything else. And yes, they have been restarting plants, and their official plan is still, as far as the last figures I saw, I think they're like 5 restarting now, but the official figure is to take the restarts to 30, which is a lot. And it is thought that this, about face on Japan's part, or not really about face, but this coming back to the uranium or the nuclear power solution on Japan's part is a big part of why secondary supplies are not swamping the price and why uranium did so well. And I should remind your listeners who are, frequent listeners to your show that we've talked about this a number of times. And I said that I was a uranium bull in 2018, and I was right. And I think, for whatever that's worth, past performance doesn't guarantee forward success, blah, blah, blah. But I'm very bullish on uranium going forward. And this 232 thing, again, it's asymmetrical. It could provide a big boost for certain stocks, but if it doesn't, nothing bad happens. We continue to go forward with the demand. And you mentioned China as well. Yes, they're building more. And you could say broadly the BRICS, it is simply the cheapest, cleanest source of power for certain environments, especially places where you just don't have that much you don't have coal, you don't have oil, you have to import it somewhere else. Or even places that want to, like Germany. I was just listening to a presentation, they're trying to avoid nuclear power, but the reality is they're importing it from France through the European grid. But they are trying very hard to use more renewables, and they built all this, all these new solar arrays and wind arrays, and they found out last year that both the wind and the sun produced less energy than expected, not because anything was wrong, just it was less sunny and less windy that year. These things happen. Nuclear power is the most stable form of baseload power, and its waste, as scary as it is to many people, is contained. It's highly contained as opposed to, blapping out all these carbons into the atmosphere that many other power sources result in.
Yes, and it's interesting. Shell bought a giant wind farm because they're looking at alternate sources of energy, not just fossil fuels anymore. And one of the wind farms in Europe, was be calm for 2 weeks. So,
Yeah, I mean, we could laugh about it. I just did. But it brings up an interesting point in what you just said, Jim, because a lot of people assume that the new energy paradigm, which, by the way, I'm not knocking. I do believe the world will move in that direction, is moving in that direction. It is a paradigm shift that I do not think gets reversed. But I do also think that nuclear has to be a part of that if you're going to move away from fossil fuels. But that doesn't mean that those energy companies, ExxonMobil and so on, that doesn't mean that those guys are all dead and that they're done. They're primarily energy companies, and they happen to have grown with oil as energy. But we've already seen them making moves in other directions. They have no intention of going extinct. They will become different energy companies in the future. So anybody out there is thinking, I'm going to short the big evil oil companies because of the new energy paradigm, I would urge you to reconsider.
We'll have more with Lobo Tiggre right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Lobo Tiggre. Lobo, what's going on with gold?
Well, a lot of people want me to be a cheerleader. A lot of people in the audience may want to hear is all my reasons why gold's great and why they should buy the dip and it's going to be great. And in fact, I do believe that. I do see fundamentals and technicals that suggest to me that this could be the year that gold breaks out of its range. And we've talked about that before. There's a free report on my website covering my bullish case for precious metals this year. But I have to say, it doesn't serve anybody well to be a cheerleader for their desired view. It's much more valuable to be critical and give you a chance to correct course if, in fact, you're wrong, and to reconsider your premises. So the hard reality in front of us is that it remains range-bound. And gold didn't even hit the 1360 to 1370 odd range, depending on the numbers you look at, that people see as the previous peaks. So we didn't even reach that before it fell down again. So the short answer is, what's up with gold is it remains range bound. We have not seen a shift, a sustainable shift in the realities of the market, whatever other influences there may be and manipulations are made. These things happen. But at the end of the day, when gold really wants to go higher, in other words, when large numbers of people around the world decide they want to add to their gold and they want to buy gold, nothing stops it. The manipulators didn't stop gold from going up from 2001 to 2011, and they won't stop it from going up the next time the world really wants its gold. That's not where we are today. That's what's up with gold today. The world hasn't made that shift. Now, would a breakout cause that shift? It could. It could add some excitement, but I would argue that's actually not the way we want it to happen. We want the fundamental realities to push gold, and then the breakout to happen as a result, and then the Johnny-come-latelys hop on the bandwagon. The most encouraging thing I can perhaps say is, in this world that we live in, I don't see gold melting down in a big way. I mean, who around the world is just going to wake up tomorrow and say, you know what? The world is so safe. The economy is so calm and pacific, and the outlook is so rosy. I don't need no stinking gold anymore. I'm dumping all my gold. I just don't see large numbers of people doing that in our world today, and I suspect most of your listeners can identify with that. So again, we're actually looking at something of an asymmetrical situation. I see relatively little downside. Gold can remain range-bound. And you know what? If that happens, we still know which companies make money at these gold prices. We still know which gold projects make money at lower gold prices and therefore go ahead and get built and maybe get taken over and make money for shareholders. Or maybe we enjoy that big run up in share prices. The company works through the pre-production sweet spot. We know how to make money without gold breaking out. So if there's a one thing that you listeners might want to take away is, you don't have to bet on higher gold prices. We know what to do to make money where we are now, and I don't see a lot of downside in that.
Newmont and Barrick have just decided to sign a peace treaty. They'll do a joint venture in Nevada, and Barrick said it'll look at other projects. So maybe their hostile takeover is over, maybe not. You never know because it is hostile. What does it do to the gold industry? This fuss between Newmont and Barrick.
Yeah, well, particularly for people who are interested in the juniors, the way I am, it does change things a bit. If you're a major gold investor, you like the big companies and the supposed stability, lower volatility of the bigger companies. I think this is a good deal. It makes sense. And maybe the whole hostile bid was never really expected to go through. Maybe it's part of the art of the deal in today's world. You make a hostile bid and suddenly a JV becomes more interesting to the company at threat in that situation. And if you look at the terms that I saw discussed, right, that Newmont had originally proposed a 55% majority for Barrick combining the Nevada assets. And what's been agreed, as I've seen, is over 60% for Barrick. So maybe that was all they really wanted out of this hostile bid, was just to get a bigger chunk of the JV. Whether that's true or not, I think the JV makes sense. I think, rationalizing the management and overhead for those Nevada assets, the obvious winner for shareholders in both companies. Now, of course, both companies have a lot more going on in other places, and there are other issues with those companies. But that's a good deal. I think if I was a shareholder in those companies, I would encourage management to go forward with that JV. What it changes for me as an investor in junior companies is if the mega merger had gone through, there would have been a lot more smaller assets and even medium-sized assets that would have divested. And if they were to apply the 80-20 rule, and I don't know that they would, but let's just say that they applied the 80-20 rule, keep the 80% of the, best, most profitable assets and get rid of the lower 20%. There could have been a lot of potential in that lower 20% that wouldn't matter to Mega Barrick Newmont, but would matter a lot to the smaller companies. So if that's not going to happen, it changes it. Fortunately, from that context, you still have Newmont going ahead with its bid for Goldcorp, and you still have Barrick rationalizing its assets after its acquisition of Randgold. So for observers, the companies on the periphery of the big boys, I think there's still money to be made there.
We'll have more with Lobo Tiggre right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, has any real progress been made in U.S.-China trade talks?
You're asking me a crystal ball question, Jim. I was just tweeting about this, though. There was a statement from the Chinese side over the weekend that, yes, we've made substantive progress and so on. But it seems like we get one of these statements periodically. If not every weekend, it's not far in between that we get something like that from one side or the other, and yet, the deal doesn't happen. So I don't really have anything breathtakingly original to say here, Jim, but I think both sides want a deal to happen. I think that's very clear to everybody. The slowdown in the Chinese economy, I think, adds heat on that side. I think the Trump setbacks, the defeat over the wall and that sort of thing on the U.S. side, incent the U.S. side to get a deal. I think both sides really want a deal. So I don't know when it happens. I suspect that I would be very surprised if it takes longer than this year, but that's a long time. So people were waiting on pins and needles. I think you need to relax and just sort of look at other market factors for the near term. That said, I would say that this also touches on something else that's very important, and that is that China's woes are not all about the trade war. I think there's increasing evidence out there that you can see that Chinese economic deceleration, and we're not saying going into reverse, but just deceleration, is a much bigger thing than just this trade war. So I think it's a dangerous assumption that some kind of deal would suddenly fix everything wrong with China. And investors in commodities and metals in particular really need to watch that closely, because if China continues to decelerate, or even if there's a deal and it doesn't come back again, that has significant and probably lasting implications for industrial minerals.
Now, of course, what we call a slowdown in China, they predicted their growth would be 6 to 6.5%. And that's unusual, because usually they say it's going to be 6.7%. And a year later, they say it was exactly 6.7%. Is this the first time maybe China's being honest?
I think that's a little optimistic. But so, nobody trusts these numbers to begin with. And nobody's gobsmacked when the number comes back to hit the official target. In a command and control state-run or state-massaged economy with no independent sources of data really on that, these things are not surprising. Does that mean they're honest, or does that mean, I don't know. I mean, we'll see. But we're not really talking about slowing. That's why I use the word deceleration. It's still growing, just not as fast as before. So it's really a deceleration of the acceleration. It's a kind of a funny word, really. It's still growing. And so, but if you don't trust the numbers, how much is it growing, and at what growth rate or low growth rate would it cause problems internally? China's different from many places. The U.S. would be happy. Europe would be ecstatic to have a half or a third of China's growth rate. That doesn't mean that if China's growth rate drops by a half or a third, still growth, but drop by a half or a third, that wouldn't cause severe problems for them over there. So I think it's a little bit dangerous to try to predict what's going to happen there. I do think that it behooves all resource investors to watch this very carefully, because there is no more important variable to commodities right now than the Chinese economy.
What about pending Brexit and Germany's economic slowdown right now? Is that a threat to the overall global market?
It is, but the UK is this isn't the 19th century. The UK is simply just not a big deal as it once was, and it's not as big a factor as China is. That having been said, the potential in the globally interlinked economy, so like the economic GDP subtraction that Brexit might cause for UK and the directly affected companies and so on is one thing. But the potential for chaos and the potential for unexpected and unintended consequences as that chaos spreads through the interlinked global financial system is another matter. And I think a lot of people don't fully appreciate that. So it might sound like I was saying a moment ago that Brexit doesn't matter. That's not what I meant. What I meant was just looking at it in terms of GDP impact or something like that. I think it's missing the ball. It's really about the systemic risk. And so many people can't contemplate this, really. They just sort of assume that the EU and the UK will work it all out somehow and that it'll be okay. But I think there's a pretty serious chance of it not being okay. And nobody really knows what the consequences will be. It could be quite interesting.
Well, I mean, in the UK itself, they're selling Brexit emergency kits. People are worried that perhaps their food supplies will be cut off.
Right. I saw a headline this morning. More than 200 companies have moved operations out of the UK in advance. Nobody even knows yet what's going to happen. Like never mind the consequences. The Brexit deal or no deal hasn't been decided yet. And for hundreds of companies to go ahead and just say, you know what, the risk is too high, I'm getting out of here, that tells you a lot about the kind of risks that we're talking about here. So, of course, if the global financial system receives a systemic shock that roils things up, this could be one of the things that really is good for precious metals.
Yes, and especially there. And I saw an interview, a flower seller, wholesaler said, right now he gets his fresh plants from Holland and they're on the shelves in Britain the next day. He said it could take 6 to 9 days to get those same plants approved by customs and sent through plant inspections and so on. Well, by the time he goes to sell them, they're dead. So he's very concerned. And yet I take a look at Canada. We get fresh flowers from Central America, from Colombia.
Yeah, I was just going to say, I'm not sure I buy that. I've been to the flower fields of Colombia. Like, Medellin is known most infamously around the world as the place of the Medellin drug cartel, right? But it's actually a huge flower growing region.
Yes.
They export them all over the world. Somehow it gets there, even though Colombia is certainly not part of the Schengen zone or the Eurozone or
NAFTA.
So I'm a little skeptical of that. But again, when the rules change, and especially if you're not prepared, like if everybody is assuming there will be some kind of deal, and then what if that gets voted down like today? There's a no deal Brexit. There could be quite a bit of chaos. And I do think at the end of the day, the world doesn't end. They sort it all out. They will very rapidly do everything they can to normalize business as quickly as possible. But how big will the shock be? And what unknown consequences to the shock might there be? Who out there is on the edge, right? Just on the verge of systemic disruption, even in some other country, like we just saw about Turkey going into recession. You may not expect this to have a huge impact in the Middle East or farther east. But what if it does? What if there's somebody on the edge and it pushes them over the edge? And, the systemic risk here is actually cascading failures.
What about Tesla's plan now to sell their cars over the internet and not have dealerships? What kind of an impact is that going to have? Where do you get your cars serviced if something goes wrong with that car you just bought over the internet? Who delivers it?
It's an example, I think, of the sort of the great debate about Tesla, about how some people keep saying, well, all you conventional analysts get it wrong. You keep looking at this as a car company. It's not a car company. It's an internet startup. And an internet startup, it's okay to have these wacky ideas and suddenly change direction. But, the latest news this morning, just coming across the wires this morning, is that Tesla's reversing course on that. They've suddenly realized maybe we can't shut down all the shops. And in fact, they're not going to be able to cut prices as much as they'd hoped, and they're going to increase the prices 3%. That's the latest I've seen. So one of the things about Teslas or electric cars is that they have far fewer moving parts, explosions happening inside the engine to contain, and they need a lot less service. So maybe the idea was, as crazy as it sounded, maybe we just need a lot less stores, or we could have just a few service centers. But I think the reality is that owners are not going to be happy to drive hundreds of miles to get their car serviced, or have to wait for a loaner to show up from hundreds of miles away to get their car serviced, and so on. So, maybe what seemed like a brilliant idea, one moment and got tweeted out, suddenly is in the cold light of the day after not so brilliant. So, who knows? That'll be reversed. But the reason why this question came up, I assume, and at some point I keep hammering, is that this new energy paradigm, it's not about Tesla. Tesla can dry up and blow away, it can go bankrupt, it doesn't matter. The shift in this direction is major. It doesn't even require subsidies anymore. Other companies are jumping in wholesale. Like even Porsche says they're having to increase, they're redoubling their efforts to produce their new all-electric sports car because demand far exceeded expectations. In fact, they've received cash deposits on the new Porsche Taycan in advance of the production model even being released. Like, there's no specs, there's no car yet. It's just an idea, and normally Porsche says that, they have to show the new model. Okay, never mind the concept car at the auto show. Here's the model, here's the production car. And then people see it, then they place orders, and they might put deposits on it. They're getting deposits, cash deposits, almost 3,000 euros, for this Taycan before it's even there. So that tells you something of the power of this shift. I just wanted to say, you and I are talking, you asked me these great questions, and I just wanted to shout out to your listeners out there that I'm planning to have another live Q&A session this coming Saturday, March 16th. It's free. You can just dump by the website, independentspeculator.com. There's a banner pinned at the top where you can get information about that. And I'm happy to take questions from your listeners and discuss whatever is on their mind directly.
I wonder if they'll be as wacky as mine.
They'll have to live up to your example.
Lobo, thank you so much for being on the show.
Thank you, Jim. Have a great one.
My guest has been Lobo Tiggre from the independentspeculator.com. He was speaking to us from Puerto Rico. And don't forget again on the weekend his live Q&A session. You're listening to HowStreet.com radio. If you have any questions for Lobo or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.